Welcome back to Pave the Way podcast, everybody. I am your host, Greg Helbeck, and today I am with Pete Barrow from Parrot Property Group out of Indianapolis. And we're going to talk a lot about what Pete is doing to be successful in today's market, how he's finding deals, and what his overall business looks like so people can learn from him and implement his success. So, Pete, thanks so much for joining me on the show today.
Thanks for having me, Greg. My pleasure.
Awesome. Well, thanks once again for joining us. We're going to spend a lot of time today kind of getting your backstory, kind of what your current business looks like today. And then we're going to really kind of backtrack into, what you're doing to find deals. I know we're going to chat about some direct mail stuff and then some other things that we discussed before, we hit the record button here. So to give the listeners a little bit about your background, how did you kind of get into real estate and how long have you been doing this for?
Well, I was a carpenter for many years. We lived on the East Coast. We lived in the D.C. area. And I always sort of fantasized about buying investment properties, but prices out there are about as bad as they are out where you are.
Yes, very true.
So nothing happened. I sat and watched while a lot of people got rich and I didn't. Then my older son, Sam, about 6 years ago, started he saved his pennies. He started just driving around the country looking at other cities, just trying to find a place that was a little more affordable. And in the back of his mind, he'd always heard me talk about, buying houses and the whole business. It was sort of in the back of his mind that he might find a place where we could do that. It wasn't the only thing, but he drove all over the country, including as far as California. He settled on this place, partly because it's pleasant. He likes it. The people are pleasant. But partly because he looked at all the numbers, and the economy is very steady. It doesn't boom, it doesn't bust. It just kind of creeps upward slowly. There's a lot of beautiful old housing stock, and at that point, 6 years ago, you could buy a house for the price of a toaster oven. Well, not quite, but it was things were coming off the crash. Things were very, very affordable. So he came out here and bought a house, and I came out and started working on it. And then we bought another, and then we bought another, and I can tell you. You want to hear more about this, or you want to?
Sure, keep going. Yeah.
Well, we at some point we ran up against the fact that we didn't have any money. But one of my old carpentry customers, a woman I've been working for 30 years, I told her what we were doing, and just out of the blue, she asked us if we needed money, which is
that's a good question.
I wish more people would
right?
ask.
I'm knocking on your door. That's
yeah.
funny.
But they wound up investing, a lot of money. My older son, Sam, the one who came out here, found them a package of big, beautiful, old, rundown duplexes in a real up-and-coming neighborhood.
Yeah.
We bought them, we managed them, did the repairs, split the profits. What happened over the next year or so, was they realized that real estate's not as passive as everyone tells you.
Oh yeah, as the guru.
They're spending more time on the phone than they wanted to, so we got financing and bought them out. So that's how we got started with our big, nice buy and hold portfolio. But the other good thing that came out of that was the person who sold us those 13 duplexes had another 4 that we didn't want, and Sam found a buyer for them and just just assigned the contract, and we had a wholesale deal, and we had no idea what wholesaling was up to that point, but that's how we learned that it existed. We did some. So then we had in one blow, we had a nice portfolio, and we discovered wholesaling and made a good wholesale deal. And then we thought, we're going to do that wholesaling thing too. So.
Of course. Yeah, no, that's awesome. So you started on the East Coast. You're from the DC metro area. I've been there before. It's definitely expensive, not like Indianapolis. Transitioned over to Indianapolis, and you kind of got I guess it looks like you got your footing with the rentals, and then you discovered the wholesaling. So what does your business look like today from an aerial view? And then we can kind of work backwards from there.
Well, it's sort of evolved. A very smart guy, when we first came out here, told us, you have to just constantly be listening to what the market wants you to do, and you have to do that.
Yes.
You can't go on just selling potatoes if everyone wants bananas. So we have sort of gone with what works. We've started with buy and hold. We thought that's all we'd do forever. Mm-hmm. Stumbled into wholesaling. In the course of, the wholesaling has sort of fed the buy and hold business, because
good cash
once
flow.
in a while yeah, once in a while we find a deal we want to keep, and also we use the wholesale money to fund the acquisitions. But then we just recently we've started doing what I call accidental flips. An accidental flip is where you get a house, and you start fixing it up to rent it out, thinking you'll hold it forever. And by the time you get finished fixing it up, you discover that it's doubled in value, and it's no longer sensible to keep it as a rental. You know, you're a house that you thought would be worth $120,000 when you got done with it and would rent for $1,200. That's an acceptable buy and hold deal. But then by the time you get finished, if you discover you can sell it for $220,000, that's
it's a no-brainer. Yeah, it's the time value of money. Yeah, no, I wouldn't.
Yeah. So we've been doing some of that just because the market here has shot up so much in the last few years.
Interesting. Okay, so you're doing a little bit of everything. That's pretty cool. So in terms of the quick question on that last strategy you shared, and then I want to get into how you're kind of finding some of your deals today. So, you know, obviously you buy a house, you fix it up, your intention is to rent it out. If the property then doubles in value, which I totally believe in Indy, especially the last couple, 24 months,
yeah,
would you guys be open to refiing that? Like, let's say you can get a refi loan for 160 and you're in the deal for 120. You can really basically put like 40K tax free in your pocket and then keep it. Would you guys look into stuff like that? That's like the Burr strategy, or are you just trying to sell those because the spreads are there?
We've thought about it, but what we're thinking about is not so much, how much money we can suck out of it, because then, it's still money, whether you've taken it out or whether you've left it in. What we're looking at more, the house I just told you about, that wasn't a hypothetical. That's an actual house we just sold.
Holy
cow.
And
the reason it went up so much is when we bought it, which was 3 or 4 years ago, it was across the street from a warehouse that had a recycling plant for returning felons in it.
Oh.
And they were nice guys. They would come over and sit on our stoop and smoke cigarettes during their break, and we'd talk. But it wasn't that attractive a property. It took us a long time to get around to fixing it up, and I'm glad it did, because by the time we finished, that warehouse was full of little hipster businesses. It's got a distillery, it's got a brew pub, it's got a place that does craft welding. It's got all kinds of little businesses that appeal to people who want to live downtown, right across the street. And they're also right around the corner. They're building a place which is mixed use. It's got a theater. It's got coffee shops. It's got everything. And you can walk to either one of those places from this house now.
Okay.
So, in the time it took us to get around to fixing it, that place became hipster heaven.
Yeah, it just turned, and I see that in some, like I live in California, but I invest over in New York where I'm from, and there's areas where in my market where I invest in, it's like you get some of these pockets where, you say the hipsters, I mean, nothing hipsters at all, but it's these trendy areas, that they were very blight, and now all of a sudden they're starting to turn around. So I think that's definitely a trend that's kind of going around the country. So in terms of finding your properties, I know obviously, before we hit record here, we're going to discuss kind of how we're going to approach this podcast. And so what are some of the, let's talk about the top, I would say 2 ways that you're finding a lot of your deals, because as I always say, I mean, a profitable investment always starts with a good like a good lead or a good deal. And really at the end of the day, we are in the real estate business, but really at the end of the day, we're truly in the direct response marketing business, right? Whether that's advertising or whether that's networking. If we don't have a way to find consistent leads coming through our database to analyze, we don't really have a business. So what are the top 2 ways that you and your company are finding, your profitable investments today?
Yeah, you're right about that. You cannot buy retail. And
no, unless you want to go broke.
Right. There are people who buy retail, pay retail for rehab, and pay a manager, and I don't know how they do it, but that's not our model. How do we find deals? Well, obviously the mailing has been a big part of it. We send out probably 20,000 postcards a month.
Wow.
You needn't raise your eyebrows. There are people who do 5 times that, and I'm sure there are people in Texas who do more than that. So
I've done a lot of deals in Texas. It's funny you say that. Yeah, it's true.
I think 20,000 is sort of medium potatoes. You know what? I know one guy who sits down and writes his postcards out by hand and sends out probably 50 of them a month. and he finds a deal now and then. He's, he's not getting a lot of flow, but he doesn't want to. He has another business. He probably comes up with a house a month.
Okay, well, that's not bad for right in hand. So that's interesting. You shared the postcard thing. Let's kind of anchor down there for a second. So you're sending 20,000 cards out, which is, like I said, it's for new investors, it's a lot, but for guys who've been doing this for a while, it's like you said, it's pretty reasonable, especially in India. It's not like you're in San Diego where it's like you need to send 50,000 to get a deal. So what is it looking like in terms of, to break down your campaigns? You're sending 20,000 cards. It's probably going to cost you, I don't know, about $6,000, $7,000.
Yeah, it's about 30 cents a card.
Yeah. So what are you seeing in terms of an ROI on that spend? Like if you send 20,000 cards in your market in Indianapolis, and obviously for all the listeners, every market's different. It really has to do with your sales skills, and there's a lot of things that go into direct mail. But what are you seeing in terms of like your average, deal volume with sending 20,000 postcards on a monthly basis?
Well, we were talking before, and I told you I spend most of my time working on houses, assessing houses, and very little time in the office. I knew it wouldn't take long before you asked me a question I couldn't answer, but I can roughly answer that one by telling you we probably move 70 houses a year.
Oh wow! So those postcards are obviously very profitable.
So you can multiply 20,000 by 12 and then divide 70 by that.
About 6 deals a month off those postcards, which is pretty good.
Well, it's not only postcards, but that's been the staple for a long time.
Yeah, that's pretty good.
What we've found lately, what started to happen was every house we'd go to that someone would call us about, there would be a pile of 8 postcards on their table.
Oh yeah.
And they'd call us, "Can I hold up my postcard?" They'd call us because ours is colorful, and I literally had a guy call us because he owned parrots, and it has a parrot on it.
Owned a parrot, and he called Parrot Property Group?
So he looked at his pile of postcards, and he's like, "This one has a parrot." We call them. But we started to think, if we're at the point where everyone's sending postcards all the time, it's time to stop sending postcards.
Sure.
So we've been doing more. We have a woman in the office who cold calls people all day, the poor thing, and she turns stuff up.
That works, man. Cold calling works.
Of course, now what's happening is we're finding everyone else is doing that, so we're about to send out a massive mailing of postcards again.
Yeah, that's what I'm doing the same. It's funny you say that. It's like you're kind of jumping from rock to rock to rock to rock, and you're trying to figure out which one is going to produce the most revenue. Okay.
I don't know what most of your listeners are doing, but as a general principle of business, I wasn't a businessman most of my life, and I had no idea how interesting and challenging business could be. And this is the kind of thing, just constantly thinking about what you need to do, constantly listening to what's happening and what other people are doing, and thinking about how to get a little edge. It's a huge outlet for thought and creativity.
It is. It's like an art form almost, especially marketing, and it's challenging and rewarding, I think, at the same time, but there's a lot of ups and downs, and you got to understand that's part of the process. So you guys are doing a lot of direct response marketing. It's obviously profitable. It's probably getting you, 3 to 5 houses a month at least. That's what my gut's telling me, at least from your numbers. And I'm a big number guy, so I can just crunch those quick. So besides some of the direct response marketing, you said obviously your role in the company, you're very involved kind of in the day-to-day, the hands-on stuff. So what else are you doing to bring as much value as possible to your brand and your company? And what do you think really kind of separates Parrot Property Group in your competitive market from some other people, besides some of the creativity I saw with some of your direct ads?
Well, one thing that separates us is we have a parrot, and no one else does. And my son Sam often brings
a parrot. Like you're talking, like I was driving.
We do have literal parrots, but we have a logo that I think we paid $4 for the right to use that parrot. And if we had to pay $100,000 for it, it would be well worth it, because it sticks in people's heads. I would go to real estate meetups, and if I'd get up to say something, people would poke each other and go, "What's with that parrot? Who cares? Why? Why is that good to have a parrot? I don't know, but it's a logo that sticks in people's heads.
People remember it.
Yeah, they do. They can't miss it. And we've got a billboard, and we've got bumper stickers and T-shirts, so we're trying to plaster it all over the place.
Yeah.
But what else am I doing? I am I'm out walking around the streets, meeting people wearing a Parrot shirt and handing out cards. I go through spells where I don't do much of that because we'll get a house, we'll have to rehab it, and I'm in there every day, and I'm just too tired to shake anybody's hand. But as that settles down, that's supposed to be more of my job. Just go around, go into restaurants, go into stores, put a stack of Parrot cards there, talk to people. You know, we've gotten deals because our crew was working outside on a house and they're all wearing Parrot shirts. You know, they don't have to. They just don't want to tear their own clothes up, so they've got a big Parrot on
Wear
their
your
back.
clothes and wreck them. That's funny.
And a big loud Parrot and a sign, a thing that says "We buy houses," and people will stop and say, "So you buy houses?" And then they'll have a card. So we've gotten deals like that. I've gotten deals. This is what you could do if I don't know how many of your listeners want to be wholesalers or are beginning investors and don't want to spend a lot of money. I've gotten deals where, you know, I went into a restaurant, put a couple of cards on the board, and the owner called us because he had a rental property. People doing restaurants.
No kidding. Just little things like that.
Yeah. I got a deal, one of our best deals. I was in a restaurant, and if you've listened to my podcast before, you're tired of hearing this story, but for the sake of new listeners, I was in a restaurant and I heard some guy talking on his cell phone, and he was obviously talking to a tenant who wanted to buy his house out, but just wasn't coming up with the money. And I could tell that, you know, the guy was like, "Well, I'll give you till Monday." And after a while, I went over and introduced myself, and I wasn't really thinking about getting the house. But I gave him a card and we sat there and talked about real estate for an hour. He was a sort of a rookie landlord, and I was just kind of being a nice guy, if you can believe that. And like a few weeks later, he called us up. We got that house. We got another house he had. We made about 20 grand wholesaling that house. Now, I know in California, 20 grand wholesaling a house is, I think it's the only guy I've talked to out there who wholesales told me his last deal, he bought for 1.1 million and sold for 1.2 million. Our wholesale deals, don't be too impressed when I tell you we do 70 a year, because we make from anywhere from 2 to 5 to 10 to a real home run is 20 or 30 grand.
20K but your price points are so much lower. I mean, in New York, where I'm from, where I do my business, I mean, you know, a lot of the houses, median house price, 300-400 grand. So we pop those big because there's more spread there, but it's harder to get it. It's more money for me to acquire a property because it's higher. You know, it's harder to negotiate. You know.
Yeah, and there's also more risk if you're having to actually buy the thing, which
we do a lot of it. We buy a lot too, so there's more capital involved.
Yeah, if we you know, we're closing on a house today, I think, that we bought for 85, and that's a lot for us to pay for it.
85, man.
Yeah, that's it's a nice.
It's in Indianapolis, damn it, that's ridiculous.
Well, it's a nice house out in the suburbs, very quiet, peaceful street. It's, you know, fairly new build, but we're going to make about 30 on that.
That's awesome. That's
that doesn't happen every day. What happens every day is low C grade properties.
Yeah.
We buy for 8 to 10 to 15 to 20 and sell for a profit anywhere between 2 and 10 grand. That's what happens all the time.
Those are base hits, and you know, this is a big business. You know, you're going to hit a home run every once in a while, but really at the end of the day, the consistency is the key. And it sounds to me like you and your company are really standing out by, number one, being consistent with your deal flow, and number two, I think the big takeaway for a lot of the listeners, and the takeaway that I'm gaining from this conversation, is that you can always stand out in the marketplace, even in a competitive market, because your simple, you know, brand of Parrot Property Group, it's very easy to remember that, and that sticks out, right? Like, especially with the postcard you shared. If people are watching this on YouTube, it's a catchy postcard. It's colorful. It's not like every other postcard will sell right now. And I think that really, and obviously I don't know you very well, you know, besides this podcast, but it sounds to me like that's really giving you and your company a competitive advantage. So the challenge I have to the listeners of this show right now is that, you know, whether you're in business right now or whether you're a new investor, what are you going to do? What's your action item that you're going to do to try to stand out? Because a lot of people complain about, oh, there's so many investors, or, oh, it's so competitive. But at the end of the day, that might be true. But number one, there's enough deals to go around. And number two, how are you going to stand out from your competition? And it seems to me like you and your company are fantastic at doing that. So Pete, what in terms of some other advice as we start to conclude this show? I mean, what are some other things that maybe one more, let's start with one more thing, or we'll end with one more thing that you and your company you think do that really kind of can separate you from another investor in your marketplace that someone could take from the show and then implement in their own marketplace?
Okay, first let me say a little more about what we were just talking about, which is that the logo is great, but if you had a soft drink with a catchy logo and it tasted awful, it wouldn't help for very long.
Yeah, that's true. You'd remember how much it sucks.
So what happens over the long term? This is a business that you build up over the long term.
Absolutely.
We're at the point now that we have a list of thousands of people who we've dealt with, who are either potential leads to sell or they're cash buyers. We're constantly following up on stuff with them, going back month after month to people who've talked about selling a house but haven't done it. So your prices have to be good, and you have to come up with stuff that people like. You have to pay enough to attract sellers, and you have to sell cheap enough to attract buyers. And to do that, you have to keep the overhead down, which we do by making it a family business and everybody working hard. Now, your second question, I totally forgot what it was.
Yeah, that's all right. So my second question was, besides the great advice that you've already given on the show, what is another nugget you could give the listeners in terms of being able to stand out with from your competition? Whether let's probably gear this more on the service side, because everyone can offer $100,000 for a house. But I'll tell you what, and I'm sure this has happened with your group because it certainly happens with my company all the time, is that actually most of the time, I'm probably not the highest offer, but sellers will go with me over other investors because I've established the fact that I am a trustworthy buyer who they can rely on due to my track record. So they value that sometimes, not all the time, over price. There's a deal I'm wholesaling right now where there's another wholesaler offering the dude $45,000. My offer was $31,000, and he went with me. That's $14,000 less. And there's got to be value there.
Apparently, when you say you're going to close, you actually close, and that's a huge thing.
You have to be able to close, or else you don't have a real business, unfortunately.
Yeah, there are a lot of people in the wholesaling business who have no money.
They have no money.
They've read they've seen a podcast or something where it's like, here's the business you can do with no money, and sometimes you can, but if you make an agreement to buy a house, you better have the money to buy the house, whether you have a seller or not. So just that sort of thing, just being solid about things, not following up, doing what you say you're going to do, working all the time, being a workaholic. There was a book I read years ago called The Secrets of Stradivari, the famous violin maker. And the conclusion of the book was there was no secret. He was just a really good violin maker. There is no trick to making violins. And there's no trick to this either. I mean, there are a lot of little tricks, but there is no, it's like you can't read a sentence that'll teach you how to play the guitar either.
No, you got to just do it.
Look at it and work at it. There is no trick to this. You just think about it all the time. You put in more hours than the next guy. You keep your overhead down. We have a family business where everybody has a different skill. I know about houses. My older son, Sam, knows about tech. My younger son managed a pizza place, so he does the management, deals with people. So we have all the skills in-house, and we were lucky to find a very good crew to do our work. We have a very good woman working in the office. And just over time, we've built up a good little bunch of people that we work with, and everyone here has been great. It's competitive, but it's not insane.
Yeah.
It is competitive. Everyone wants to get the house that you want.
That's it.
But they're not, I don't know. It's not like the East Coast.
It's a little, I get what you're saying. I think in India, obviously it is competitive, but I think the houses are cheap enough to where there's enough. Yeah. It's a little easier, I think, to negotiate a property that's under $100,000 than it is to negotiate a house that's worth $500,000, especially in my market. Yeah. And then I think the trade-off is you can do probably more volume in Indy, and the spreads are going to be a little lower. In New York, you're going to do less volume, but the spreads are higher. So it's what do you prefer? And obviously your marketplace is very good for rentals as well from obviously what we've discussed about today. So the second takeaway, I want to just, before we wrap the show up here, you said something very important that I want to definitely emphasize again, is that if you're listening to this and you're a brand new investor, because I have people all across the board listening to the show, if you're a brand new investor, if you have no money and you have a deal, you can always close because you can always call an investor up who has experience who would gladly either JV the deal with you or you can wholesale it to them. So that's a mistake that I made when I got started back when I was 20 is like, I was not thinking on my feet well enough.
Right.
I thought that I had to wholesale every house, and I've left hundreds of thousands of dollars on the table by having that mentality. And now obviously I don't do that anymore. But the big takeaway is that if you have a true deal and it's a legitimate one and it's not a BS deal, you call an investor and they will help you out, right? Assuming they're a credible person, I'm sure they are if they're out there podcasting or offering, buying houses every month. There's no way you can stay in business if you're not a legitimate person.
All podcasters are wonderful people.
Yeah.
No, but that's true. You can call. You can go to the local RIA meetups. You can just look for wholesalers. Any wholesaler in the market in times like these, there are plenty of buyers. It's harder to find sellers.
I 100% couldn't agree more.
If you have a good deal on a decent house that people will want, you take it to another wholesaler. He'll work with you.
They'll buy it. They'll buy it. It'll get the property. Will get it. It's all about the deal. In real estate, the money's made with the deal. I think that's something that trips a lot of people up. It's like, oh, what about the title company? What about the lawyer? I'm like, dude, don't just get the deal first. Get the leads, right? And then the rest will take care of itself.
That stuff scares me too. But I have both of my sons are much better. They have no qualms at all about stuff like that. They're much better about dealing with the city, dealing with agencies, dealing with banks, lenders, buyers, and title companies.
That's it.
Yeah. If you can find some little old lady who just wants to sell her house and move back to Alabama, and she's willing to give you a good price because she wants cash in her hand in a week or two,
you're good.
Go find a wholesaler.
Yeah.
He'll make it happen.
Absolutely. I couldn't agree more with that. Well, Pete, this has been a real fun show. I really appreciate you hopping on the line today and joining me. I think the listeners definitely got a lot of different nuggets, I think, from the show. So I want to just sum it up and then we'll share your contact information. So Number one, the takeaway for the listeners here is find a way to stand out from your competition, right? That's the first takeaway. And the second takeaway I would say that I personally gained from the show is that at the end of the day, the more the more exit strategies you have, the more tools you have in your tool belt, the more successful you're going to be. Because, a lot of times investors, they look at themselves as they're just a wholesaler or they're just a landlord. I think the more you can be flexible, like you said, you sharing that example earlier with the house you were going to try to keep as a rental, you turned it into a flip because of the market. The more flexible you're going to be, the more successful you're going to be. So Pete, this has been really fun. What would be the best way for people to reach you and your company if they want to?
You can just Google Parrot, Indiana. You'll find us, I'm sure. Our website is parrotpg.com. That's awesome. That's for Parrot Property Group. Our phone number is 317-204-2900. Let me say one more thing before we close. As far as having a vertically integrated business like that, where we do whatever seems to work and keep piling up different skills, my son Sam is now he writes all our software already. He's now trying to put all that together and create a package of software for people in the business, investors, wholesalers, brokers, and he's looking for a marketing partner. He knows the software, he knows the business. He's looking for someone to market that for him, some kind of share deal. So anybody out there?
Cool. So if anyone out there is a marketing guru and they want to help Pete's son with the software, reach out to him, call his office, go on the website, fill out an email inquiry, and see if you can provide some value, because I'm sure whatever software it is, it's fantastic, because Pete's a highly successful investor. So Pete, once again, thanks so much. I'll include these contact links in the show notes. I got a lot of value from today's episode. I'm sure the listeners have done the same. We will talk to you soon.
Okay. Thanks, Greg.
See ya.